People are going to lose their minds. This is a moment in history unlike anything humanity's gone through. It's a very different world for humans to come.
Take a step back and see the broad picture, which is the way all these technologies are interlinked.
Because this is all about exponentiality, and humans can't think in exponential terms.
How consequential do you want to say machine intelligence is? It's almost certainly as consequential as writing. How long did writing take to disseminate through the human population? Hundreds, thousands of years. And we're dealing with it now on a scale of months.
But in this kind of world, you're compounding 100% growth every year, and the numbers become astronomical.
AI is going to spot patterns in the world that were just completely invisible to us.
Even if you think that the AI and the robots are your demise, you might as well bloody invest in them and make some money out of it. If not, you're just going to be angry man shaking your fists at the clouds. My crypto journey, as many of you know, started back in 2012 when I'd gone around the world trying to start the world's safest bank, having seen Europe blow up its banking system, the government's almost defaulting, hot on the heels of the financial crisis. And I knew that we needed a different answer. In that process, a friend of mine, Emil Woods, who was one of my Global Macro Investor subscribers, that's my kind of high-end research service that I've been writing for the last 19 years, Emil Woods kind of tapped me on the shoulder and said, you need to look at Bitcoin. And the moment I saw it, I kind of understood that there was two component parts of this. One was the cryptocurrency itself, which was interesting, but also blockchain technology and how it could solve many of the problems of the world's financial system. I wrote the first ever, I think, macro strategy piece on Bitcoin back then and started investing. At Global Macro Investor, every year we have a roundtable. It's magic. It's like a whole bunch of old friends who've been, most of my subscribers have been there for a decade or some of them 2 decades, get together and we talk macro. We talk ideas, we share some wine, we have some laughs, and we hatch plans of doing stuff together, businesses, co-investing, all sorts of stuff. I got Emil Woods to present about Bitcoin. And periodically he came along and presented. At those roundtables was Dan Tapiero. And so he's been part of my crypto journey, and I'm part of his. And we've learned to do the hard work and to really, really dig in and get the full macro understanding of the space. Neither of us are technologists, but we have 30 years of macro. We understand how economies work. We understand how markets work. We understand market psychology, and we understand opportunity sets and secular trends and direction of travel. And so Dan and I have always been kind of updating each other on this. And I think many people famously remember Dan coming to me on Real Vision back in 2018, I think it was, or 18, saying, hey, listen, you need to look at Bitcoin again. And I had sold out of my Bitcoin position in 2017 into the big rally. And Dan single-handedly got me back in. And, we've been interviewing lots of people on Real Vision. Crypto's been part of Real Vision since 2014, from our very first video. And Dan single-handedly got me across the line to get back in and focus again. So I didn't buy immediately. I bought back in 2020. And Dan became very well known in the crypto space for being another one of the macro crypto guys. Myself, Dan, Dan Moorhead, and a few others have been there, Alan Howard and others. And so it's an utter pleasure always to sit down with Dan. He's a really good friend of mine. We follow each other's journey. We help each other out. And, Dan is up to some truly brilliant stuff. And he's just such a great thinker. So I think where we are in the crypto market is we're in late spring. And late spring is when it starts to get really interesting. It's not a one-way bet. We will have periods of consolidation or, sharp sell-offs. It's very normal to see a 35% correction in a crypto bull market. But spring is just the start. We've got summer to go and even into fall when the weather's still good before things turn again. So we've got a couple of years ahead of us of life-changing opportunities in one of the biggest macro trends of all time. And what's great is how people still don't yet get it, and they don't yet believe in it, and they don't yet understand it. And that means we get to be first. Even if you're the class of 2012 like me, or you're the class of 2023, you will still be early, and the opportunity is ahead. This is what Dan and I think is the big macro bet, maybe the biggest macro bet of all time. Anyway, let's sit down with Dan Tapiero and talk crypto. Join me, Raoul, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Dan Tapiero, how the devil are you?
Raoul, good to be back. It's been a while.
That's right. We're both in the Caribbean, different parts of the Caribbean.
Yeah, it's beautiful here at Dorado Beach. Very happy to be here, especially during the winter.
Exactly right. Exactly right. Now, listen, I think what we'll do is we'll first talk macro as ever to kind of level set. Then we'll talk digital assets where we are, and then we'll talk what you're specifically up to, because that's always a nice kind of journey for people to go down. So you and I seem to have been the only people who actually thought this was a stupidly disinflationary environment, and we've both been yelling about it. Talk me through your macro view.
Yeah, well, I have to say, I was right about the trajectory of inflation this year, but wrong on interest rates.
Same.
Look, I think this year, you and I have both been right on inflation, but frankly, wrong on interest rates. I think the Fed has made a terrible mistake by not following their own dictate that policy works with a lag, and usually an 18-month lag. So in my 30-year career, and I'm sure in yours, we've never experienced a Fed that was responding month to month, as a result of CPI readings or employment readings. It's always been, policy works with a lag, about 18 months, 24 months. And so I think they turned extremely aggressive tightening at the absolute peak of the CPI. It was right at the 7% print or whenever that was. And CPI's come down just about every month. And so, while we were right about inflation, they kept tightening. And just recently, of course, the 10-year broke out to the upside. So I think our view that broadly this tightening will be disinflationary was right, even up to, I would say, 3.5%, 4%. Now there's a risk that it could actually slip into deflation.
So my view on this, because I've been observing exactly the same thing, this macro breakage between what the Fed normally do and what rates normally do. And my view is the Fed aren't stupid, so they did it on purpose. And, I talk about this debt refi cycle, and the only way of doing that is to have deflation, so then they can get rates lower and they can use the balance sheet. I kind of feel like it was purposefully orchestrated.
I don't know, Raoul, that seems, too fancy. I mean, honestly, it doesn't really, look, that's possible, but I think it's a bit too fancy in a sense. I'm not sure that they think that they have that much control. The way they acted, at least in my view, it feels to me like they've been acting from a position of weakness. Not strength. They've been very reactive. This hasn't been planned. So look, as far as I can remember, this is, I say the worst Fed that we've lived through, but I really think they didn't tighten soon enough. Then they panicked and over-tightened, decided to over-tighten at the peak, and now they're staying tight. Now, look, that doesn't preclude them from potentially shifting again, in March or April when the data becomes even more clear. But I just think that, look, if there were ever a case to be made against centralized monetary policy, think about it, a handful of people sit around a round desk in DC and make the monetary policy for the world, especially in a world which is moving towards a decentralized framework, driven by AI. And you've talked about this in your monthly letters. It's such an interesting, intense, vast world that it is an anachronism to think that you've got, whatever, 8, 12, 70-year-old guys sitting around looking at the PMI and the payroll number and waiting for the headline CPI, to make a decision. It really seems, especially given how much time we spend in this new digital asset ecosystem, it does seem really antiquated.
It feels a bit ludicrous, really. It's looking at data releases month by month when there's real-time data everywhere. Everybody knows what's going on, and they're all sitting there shuffling around the latest inflation report like it's a surprise. I mean, it's the weirdest thing.
I know. And you get a 0.1 surprise to the downside, and everyone is cheering, and it seems, so I think that's one of the reasons I've been bullish on the stock market. We had that peak in July. We bottomed in October. Bullish on crypto really since Q4 of 22. Within about a week of the FTX collapse, I was very bullish on Twitter. In the funds, I put $120 million to work within the next few weeks. I think that was the low in price. Again, we talked about this the last time, but it was a very obvious bullish divergence. You had the worst possible news you could imagine with Sam Bankman-Fried FTX collapse, and yet Ethereum couldn't make a new low in price. So just old-time trader, very obvious. The selling had dried up. We then spent the next 6 to 9 months going sideways with an upward bias. And I think the sentiment low was achieved sometime in the summer on the Gensler attack and the suing of Coinbase, et cetera, et cetera. And now we're into the next leg. I would say the second inning of this 9-inning bull market in crypto. So I think we would be much higher in price if the 2-year were not at 5%. I think the high in the 2-year yield was made just like last week. And I mean, if you look at the like a 3 or 4-year chart, it just started to drop. And I think we'll probably be around 3% next year.
What confuses most people is we say they've over-tightened, which is probably recessionary one way, shape or form, whether it's a deep recession or not, doesn't really matter. And people are like, well, we're going to get another crash. And I'm like, no, that happened last year. It was priced in.
That happened last year. Yeah, we priced all of that in Q4 22. And this is something interesting. I think, and we may have even discussed this before, but I think the smartest players in the TradFi traditional markets today are the tech and technology-focused PMs. And I think that the most intensely negative Fed for the NASDAQ got priced in over a year ago. And the bond market, which in my view, I don't want to say there's no intelligent life forms left there, but in the 1980s and 90s, the smartest guys in the world, I mean, the Mike Vranoses, the smartest guys were in the bond market, the math guys from Caltech. We didn't have tech essentially. I mean, it was just venture in the 70s and 80s. And so, the number of players, especially in the 90s, like really great investors who focused on the bond markets exclusively, it was a huge number. I don't think the bond markets have as great an ability to forecast and discount the future as the people on the NASDAQ do. And it's a bit of a strange thing because I'm not saying that the bond market is wrong all the time. I just think that they're too close to the historical data series, whereas the NASDAQ investors are already looking out 3 and 5 years. They're the ones who have the ability, I think, to more properly discount the future, which is not something you hear. But I remember, I don't know anyone really left in the bond markets. Maybe you do. I mean, but you remember the intense, the Solomon Brothers guys, all of those.
They were amazing. They were the legends of the industry. There's nobody there now.
No, and it makes sense. I mean, the rates were zero for basically for 10 years of real rates. So there wasn't, great opportunity. And so the smartest people always drift to where the opportunity is the greatest to make the most amount of money. And, that's why I think, especially being in the world we're in with digital assets, the smartest guys I've ever are in this space. Now, I don't think that they're very good at discounting the future. The younger guys, many of them, they're not markets guys. There's a lot of retail involvement. But I certainly do not believe in the bond market's ability to price a future, like even a 3-4 year future, well. And so I think that the NASDAQ discounted the worst case for the Fed a year ago. The bond market just did it 2 weeks ago.
And my view is that Russell 2000 is the same. It's living in present day macro. And Stan Druckenmiller always says this, you need to live 6 to 18 months in the future. You can't live in present day macro, but the Russell 2000, the bond market, the oil market, the copper market are all living in today's macro picture, which is bizarre.
Yeah, I think it has to do with where are the risk takers out there? It's the pension funds that are in the bond market these days. They're not in the, cutting edge crypto digital assets, or even in the NASDAQ 7. I mean, how many people out there are continue to say, oh, the market's terrible. It's only these 7 stocks. Well, it's because those 7 stocks are unbelievable and they're completely dominant. They have no competitors anywhere in the world, like Microsoft, Amazon. These are non-replicatable businesses. You can't just pop up one day in France or in Indonesia or somewhere and all of a sudden build that. And so we forget there's thousands and thousands of employees. They're very well organized. They are the ones that are going to be able to pivot to an unknown future. It's not some utility or some manufacturing company in Tennessee or whatever it is, right? I think the world really has changed. And we talk about this a lot. We see it in crypto because it's the most age sort of demarcated market or sector I've ever been involved with. People under 35, all of them understand that this is the future. And people over, 60, 65, they still don't quite understand it. They don't believe it. On Twitter or X, there's a lot of talk about like doing the work, right? Doing that deep dive. Now, you've been in this space since 2012. I mean, you've had a great call, maybe even before, I don't remember. You've had a phenomenal call on the space. But you've done a huge amount of work, as have I. And it's not just, oh, it's going up, we're interested in it. I mean, we think this is, I think probably the most important global macro development, certainly, I don't know, in the last 50 years, I mean, since all out, even more than securitization. I mean, I think it's much bigger than anything we've dealt with.
I took, like you, when you see the landscape all going towards one way, and for me, it was like technology and crypto, and then you just look at crypto and it just outperforms everything. It just coalesces all of your focal point into one thing. And I went, like you, deep down this rabbit hole. I've probably created more macro understanding of crypto than anybody else by thinking and building.
That's right.
And, you've gone massively into the space. I mean, you kicked me back into the space in 2018 or 19. I hadn't given up on it. I just wasn't focused on it. And you were like, you were pretty close to, that was, I can't remember. That was like June 2018. And by October, it had bottomed.
And then Q1 19, I was really pounding the table. And I remember you were concerned about Tether. And I kept saying, and I remember this clearly because I said, well, the value of the space at the time, I guess, was around 300 billion, like total value in the space. And I think Tether was like 20 billion or something like that. And so I said, maybe it was, I can't remember, but I thought, okay, well, if Tether goes to zero, like, so what? It's a drop in the bucket. It was sort of the same big like macro value analysis with FTX. I mean, I thought the maximum total loss in FTX, like the next day would have been, it was like $10 billion. But the space is worth over $1 trillion. Like the value of all the cryptocurrencies and all the equity in the space. So who cares about $10 billion, right? It was just the sentiment. There's a lot of emotion, human emotion that comes to play in this space. I have to say, because there aren't as many professionals, like, old-time portfolio managers, people who have gotten crushed many, many times. I mean, I've had, tremendous number of ups and downs over the years, right, in the traditional markets. So I don't really have much emotion, when it comes to analyzing the markets. But if you're a 27-year-old guy and you've never been involved in, 100 different markets, and you're feeling rich one day, and wahoo, you're buying a Lambo, and then a year later you're suicidal because you've lost 80% of your money. So thankfully we get to avoid that. And I mean, I saw recently, the charts also help us because it gives us a sense of where the market is pricing. You've had a phenomenal call on Solana. I guess we can talk about that later. But I think, the fact that, and this was in your monthly GMI, that I think everybody should be getting. I don't know how anybody in crypto does not get the monthly GMI.
I'm really proud of it, actually. It's a bloody good publication. I've got to admit. It's
really good. But you said, look, the moment in Solana at $20 had equivalence to you of Ethereum at what was the price?
2018 low, which was
right. And the same thing, Bitcoin. But you mentioned the prices, right? The beginning of the previous bull markets. And so people, should understand that when you're making that kind of comment, it's like, it's the residue of 30 years of analyzing markets. It's not like you're some kind of cheerleader for the space. Like we don't have that. I don't care about cheerleading, right? We want to get in at the right time, notice when the market is cheap, have a view about the future that others don't have, and then execute it, right? It's not a cheerleading thing, right?
No, and also you and I learned a new trick, which was that we realized that this was a long duration asset and you need to have a longer time horizon than was traditional in macro.
Yeah.
And we both had to learn that trick. You have to learn it. It's hard, but you learn it, and you learn, as you're doing now, is if you've got a long duration, you should be buying in the sell-offs and not selling. And, I watch what you do with 1RT versus most VC investors. They're waiting for prices to go to highs before buying because they don't understand the macro. It's crazy.
I know. They're not market-oriented people. And I think that's what's so interesting is that our space, it really is a market. And I say often on X that it's really the only truly free market out there. We've undergone tremendous volatility, massive creative destruction every, 2-3 years. And there's been no government intervention. There's been no centralized authority coming in. It really is a free market. And I'm a free markets guy from the 80s and 90s. That all came out of the Reagan era. And every effort to sort of tamper with the markets, to me, sends wrong signals. And, I think that's probably why we're in the position we're in now with the federal deficits and, the old fiat system. There's just too much interference, right? Like, I think you and I both agreed somewhere in the early 2000s, 2010, I'm not sure, the pricing signals that we used to look at in the 90s and 2000s that were more pure, they've gone away, right? The market doesn't price assets based on, I think, value. You have all these different actors and there's politics involved. So I really appreciate that. I know, like, that's not something that people talk about much.
Also, Dan, the other thing I wrote about in GMI this month is like, I'm trying to get people to understand what this is. So you go to a traditional asset allocator. This is what you and I grew up with as emerging markets. It's where you can make money. This, I wrote this article about crypto land and fiat land and how the ETF is just a trade agreement between these two different worlds, and that crypto land is growing faster, the population's growing faster, productivity's higher. So obviously it attracts capital over time. And I think, emerging markets have gone nowhere for over a decade now, some 2 decades, some 3 decades. And you're like, here is an emerging market that's growing faster than any other emerging market you've ever seen. That old emerging market allocation should really be a crypto allocation. That's what I'm starting to get my head around.
Yeah, but I think crypto is bigger than emerging markets.
I know, this is really this is for the traditionalists to try and get them to understand. It's much bigger, obviously, because this emerging market takes over the world.
Yeah, I think that's right. I mean, the emerging market play was also a value play. These countries were starting at zero. You had, you remember those Polish bonds in the early 90s. And, these are countries that were in communist, and there were no economies. China was a zero. I think it had, in the late 90s, China's GDP was $1 trillion. I mean, just a little bit larger, I think, than the size of Canada, right? So these countries didn't exist in an economic sense. And so I think that was catch up.
But isn't that the same thing? Isn't that the same thing?
This is the application of math and computer science and, game theory and sociology, psychology, to, I think, the entire world of value. So it's much bigger than just some countries, catching up and growing. It's just that there's a complexity here that's difficult to understand, and you really need to spend a lot of time to focus and understand why it's such an important, I call it invention. I mean, this is the first time we did that first interview in the middle of 2019.
Security truth machine.
Yeah, and I think that's really what it is. What's a bit strange is that, you have people in positions of authority in the US like Gensler who are, actively attacking. So it's not that it's even a neutral. He doesn't talk about all the benefits ever. I mean, it's absurd. So now we have other countries around the world that have done the work, Singapore and Hong Kong and the UAE. London is moving ahead a little bit. And I think that businesses are drifting there that are in the digital asset universe, and people are trying to stay away from the U.S. For now. I think it's just for now. It is curious to me. Do you have a
Well, my mental model for this is the fact that London started the FX market in the 60s because the US had protectionism once it got off the gold standard, or the 70s.
Right.
And then the UK said, well, everybody needs to now swap currencies with each other. We'll set it up in London. The US was being restrictive. They had capital controls. So that London took that over, then became the lending market, which was the Eurodollar market. The US stopped their banks doing it. So the UK took it, created the biggest market the world has ever seen. Then, same thing happened with derivatives because we had the CME and CBOT in the US. The UK changed the bank regs to allow OTC derivatives, and the swaps market came, which became $1.4 quadrillion. The US missed that all. So if you remember, you and I would generally meet in London in past days.
Yeah, of course.
Everything was in London. The FX market, the derivative market, everybody was there. Goldman's headquarters, sure, was in New York, but the intellectual capital was all in London. So were the profits.
The trade.
And I think we're just going to repeat the same thing. I think the US is a bit nervous about its reserve currency status and how it fits in with this world. So
really?
London...
I'm not really there. I don't think that there's anything that's really going to challenge the dollar in the fiat world.
I don't either, but they seem scared of it.
I know. Well, the dollar has gone down. If you look at, it the other way, 99% against Bitcoin in the last 10, 11 years. I mean, people have lost huge amounts of purchasing power who have not moved into this world. And again, that's the risk, I think, of the TradFi people not moving in, is that their wealth, the value that they have, continues to erode. And we've talked about this again before, that I think that instead of a debt jubilee or debt problem, what happens is that debt just very slowly sits in the traditional world and devalues versus everything in the digital world. And so you have the digital asset ecosystem that's debt free. And so it's a pure market, it's clean. This right now is the beginning of the normie, traditional corporate world adoption of Web3, blockchain, crypto, digital assets, whatever you want to call it, it's happening now. At the end of the last bear phase, we didn't have hundreds of companies like trying to figure out how to like incorporate NFTs into their, business model. Now you've got Adidas and LVMH and Nike and all these giant companies on that end. You've got Franklin Templeton and Fidelity and BlackRock. I mean, the buying hasn't happened yet, but they've put down their stake and they've said to the people in Washington, listen, we control trillions of dollars of assets. Okay, we want an ETF. All right, so that's great, but that's just a conduit for capital. Can you imagine what's going to happen when the people at those institutions understand that that is just the very beginning of what's so interesting about this world, right? Just buying Bitcoin and Ethereum, I mean, big deal, right? Like that's great, but it seems they don't have any greater conception for what's going on, which I would call is the digitization of all value that exists in the world. At some point, will sit on a blockchain somewhere in this D8, as I call it, right? And that's where we're going.
I agree. And, when people ask me, what do you think of the structure of the bull market that lies ahead? My view is probably similar to yours. It's everything, everywhere, all at once. Because
it is. And it's building. I know. I completely agree.
It's like we know we're going to digitize finance and everybody's working on it. All of the big shops, plus all the private sector. We know the NFTs and their applications, and with the Solana compressed NFTs means you can make millions of them for cheaper than printing a ticket. So that's ticketing. There's all of these structures that are all going to come together because everyone's been building them and you see it because you've been investing in this. Most people can't see it until it's in front of their faces, but we all know what's coming because everybody's been working on this shit forever.
Yeah, and it's still early. I mean, honestly, I'm surprised at, how early, but it's still early. I mean, the space today, and this is incredible, I would say between $2 and $2.5 trillion of value in it. So again, I see big macro. Here's TradFi with hundreds of trillions of dollars, total wealth north of 500 trillion. And then over here is the digital asset ecosystem. All the cryptocurrencies now are worth about 1.5 trillion, with 1 trillion of it being Bitcoin and Ethereum, plus a little bit. And then I think we have another 500 to 800 billion in the value of the equity of the businesses in this world. And as you know, that's what we've invested in. We've invested in 24 of the, I would call mid to late stage, so not venture, of growth, at the growth stage of companies in the space. Again, I'm not a venture guy. It's very hard for me to, make specific bets based on the quality of the code of one chain versus the other. We're really looking to invest in companies that are 50 million in revenue and greater. And so we built this portfolio now that I think is a great proxy for the space. And we're in the middle of raising our fourth fund. And the opportunity set today, I don't want to say it's never been better, but the pricing has come in tremendously for the equity of some of the businesses that are really core to the ecosystem, like Consensus. That is, the stock trading in the secondary is much lower than their previous rounds. And it's not that the company is worth less, it's that there are distressed sellers still. There are hedge funds out there, individuals, there are people who need cash, right? Like we did a little bit of secondary the other day for somebody who needed money to pay their taxes. So, because there are younger people in this space and they're leveraged up, right? They have everything in this space. And so some of them got a little far out over their skis. And so tremendous opportunity for us also to lead the next rounds for many of these companies.
But don't you notice, to go back to the point I made earlier, there's almost nobody else doing this. It's like so bloody obvious. The timing is so good. And yet none of the VCs are deploying capital. It's crazy.
I think that the fear in the marketplace, the fear of the markets, the fear of the Fed, the fear of Gensler. I mean, but I think it crescendoed about 2 months ago. But I think that that's what kept people on the sidelines. The venture to me is very different. If you're investing in the seed or early rounds in this space, you have a tremendous amount of risk, but you also have potentially tremendous upside. We want to invest in companies that we think can make 5 to 10x over the 10-year life of the fund. And so this concept of duration that you talked about is very important. I think we both learned trading and managing portfolios in the old macro world that, you can have very fidgety investors. You can have a great macro idea and your macro idea could go up 5x, but if it goes down 30%, in a 3 or 4 month period, you get blown out and then you lose the trade and, everyone comes screaming and you don't know what you're doing and then you end up being right. Anyway, so, after having experienced that a bunch of times, you realize that if you really want to build wealth in this space, you have to buy something that you can hold for 10 years. Whatever it is that you like, I'm not saying, you should come into my fund. You do what you like. I said, whatever it is that you're comfortable holding. And so the structure of the fund is such that I don't want to say it's been impervious to the bear phase, but we've had a very little drawdown, very little, because the portfolio is diversified. We have companies that are core infrastructure that continue to make money. You can see that some of the areas, I call it underneath the hood, have continued to grow tremendously. I mean, stable coins, I think last year settled $8 trillion of value. That's up from 0 3 years ago. And I think we're going to get close to that number again this year. The transaction value versus PayPal and Visa. And people are always shocked to see that there's more value of the transactions, right, than in, because Visa and PayPal will do many, many very small transactions, and you can get a $300, $500 million trade on Bitcoin, right? So the value that's been transacted is actually greater today. Most people aren't aware of that. You could show that if you like. So I believe, and I've said this before, Bitcoin is the invention, is the core asset. The code is the core asset of the space. Ethereum, I think, now has achieved network effect and is the layer that many developers, prefer building on top of. And you can see there are more and more developers coming to the ecosystem, even through the bear phase when Bitcoin, Ethereum down 50 to 70%. Developers continued to move into the space. And so now that those two are the core assets, I think you're making the case now. And I think it's probably right that Solana is the next one, maybe 2 years from now, to achieve network effect. But on top of all that are many different companies, many different businesses, many different, iterations of what happens in the old world, right? So even look at the US banking system, right? I think that is, collapsing on itself, right? Slowly contracting. There are too many banks. And it's, slowly payments and savings I like this concept that Bitcoin is a savings technology. I think it is, right? Custody, all of these different areas within the overall ecosystem. And I showed you, I have also a slide that it's super proprietary, but I mean, I'm going to share it here with you. It's a map of the digital asset ecosystem that we share with our investors. And
yeah, that's fascinating.
It is a map. You won't see that anywhere else. I've never seen anything like it. We've come up with it because when we make investments, we want them to be leveraged to the growth in the overall ecosystem. And so in that way, during bear phases, we have some stability, right? We're not just, the funds had very minimal drawdowns in 22 and 23. Even though we had some companies in the portfolio, like the
it's quite funny. I bumped into Stevie Cohen. I was at his box at the Met.
Is that right? Okay.
We were chatting about you, and typical Stevie, he's like, "Yeah, I bet he's lost his ass in that whole digital asset VC." I'm like, "No, I think he's fine." He's like, "You must be taking pain." I'm like, "Stevie, it's VC. There's no mark to market."
Or it's growth. It's really growth equity. I really don't think about us.
No, but yeah, growth equity.
There's
but
a little bit of VC there. Well, I worked for Steve for 10 years. And so, we remained friends. And
yeah, he's very fond of you, but it was funny. First thing he did was like, he's got to be losing money. I'm like, Steve.
He's very competitive. Let's just say that. He's very competitive. He's one of the great, certainly business people in that hedge fund business, of all time. And probably, in terms of just being a pure equity trader, I think he does less of that now, but phenomenal hit ratio. He's like a sniper going in, but he's very short term. He doesn't, he doesn't, trade or hold investments or think about things on a 5-year, at least for the portfolio. So it's a very different outlook, but that's exactly why I was there sitting next to him for 5 years, because I had a very different outlook and mentality. And I think that was valuable to him because he doesn't think in that same way. Now, is my way better than his? Probably not. He's accumulated, I don't know, whatever it is, 20 billion or whatever it is. And I'm not. So maybe his way is better. But you know what? We don't get to choose that. I think we all move towards our core strengths and competencies.
Here's a question. As you're going around the world, because you've been traveling a lot this year, raising for this fund, what kind of investors are you seeing now? Is it still family offices predominantly, or are you starting to see finally the institutions coming in?
Yeah, so I would say that for most of the year, and again, I've never traveled more than I have this year. Crazy travel schedule, but mostly larger family offices. But in the last 3 weeks, all of a sudden, people who had said they would either come into the fund in January or who were, crypto, blockchain, whatever, not a priority, all of a sudden want to have meetings. And so it actually just started in the last few weeks. And I mean, very, very large institutional people that haven't, okay, this is important, that haven't invested in the space at all. So that is new.
Why?
We have, as you know, we have some institutions in the funds, Texas Teachers and the Michigan, MERS pension fund. And so we have a few of those, but the U.S. institutions are still nowhere, meaning that their level of understanding is not great. They're not really interested. I'm talking, endowments, pensions, the tens of trillions of dollars out there. Maybe with BlackRock and Franklin Templeton and Fidelity, maybe a year or two from now, they'll start to, when Bitcoin's at 80,000, then I know. However, the larger foreign institutions now Because there was never really much of a bear market in sentiment, okay, in 23. So remember, the market bottomed in Q4 22. But, I was in Japan. I went to Tokyo for WebEx, 15,000 people there. The Prime Minister of Japan spoke. I was in Singapore at 2049. You could get run over by people like it was a stampede. I mean, 10,000 people there with 400 side events. In Dubai, every other week, there's another, crypto, Web3 blockchain conference. I'm going for Abu Dhabi Finance Week at the end of the month, and then heading to Hong Kong for another week. So it really never stopped overseas, and it's just the U.S. press and the drumbeat from the SEC and the Fed. It was a combination of the Fed overdoing it, scaring people on liquidity.
Are you finding it's more Asian-led, or are you seeing interest in Europe as well?
No, it's Middle East. Remember, going back to our old days a little bit, the Middle East currencies are all just pegged to the dollar. So their savings are like essentially 90+% in dollars. Every barrel of oil is in dollars. If they convert it to dirham, it's still in dollars. So, think about the accumulated wealth of that entire region. They need to diversify a little bit, right? So they understand intuitively that this is an alternative. It's very different. Asia is more focused on blockchain gaming. I mean, Korea is the global hub. Japan, it's all about Web3 and how those traditional gaming companies become blockchain gaming. They see it. So I think it's very gaming focused. Europe still, I'm not, seeing a lot. I mean, I think that Europe is very bureaucratic. So maybe they're moving first with the regulatory. And I think in March, something is coming out from the EU, and then London, as you said, is making progress. But, and I've said this before, each of the different regions around the world, they're really, there are different use cases that excite them. When you go to Paris for Blockchain Week, it's really the luxury goods companies trying to figure out NFTs, right? It's not the same thing. As I said, it's more gaming in Asia. Middle East, to me, it's more about actually cryptocurrency and savings technology. And I think this new area, RWAs, real world asset tokenization, this is what we've all been waiting for many, many years. And stable coins are actually, and that's the first step in the RWA.
Let's tokenize Eurodollars as far as I can see, it's
right,
straightforward.
Exactly. Exactly. But it's now big. It's happened. And so I think that's sort of leading the way for tokenizing all different things. One of our companies, Figure, led by, I don't know if you remember Mike Cagney. He used to be in the
I do, and I also saw him at your events, and they're super impressed. Tell people about what Figure are doing, because I think it's really interesting.
Well, they're doing a whole bunch of things. I would say they want to be the platform for all potential things of value. So from funds, they've started to tokenize funds. I think, credit instruments. Their real focus is mortgages. So they're going to do a few $100 million in revenue this year in the HELOC world. So they've become a prominent HELOC player. And it's really interesting. We've been doing some more digging recently. They've actually incorporated blockchain into the mortgage origination process, the HELOC origination process. And I have this chart, maybe, I don't know if I probably can't share it, but at different places along the process of going from applying for one to actually receiving one, they have, I would guess restructured. They've restructured and injected, their own technology into the process, such that you can save. I think it's something like they're saving 2 to 3 percentage points on every HELOC that's done. And so I think, they also have a white label product. So there are other mortgage players that are seeing what they're doing, and they actually are using Figure product. And so I think mortgages are complex. And so they've started with mortgages. And I think hopefully they would be the place that potentially all mortgages would be tokenized. And again, I think his vision is much bigger than that, is to be a place, where you have real estate. There's a great flywheel. I think I even have a chart here. Yeah, here it is. He's asset management, bankruptcy transactions, DApps, lending, asset-backed securities, fund solutions, crypto spot trading, derivatives trading. Anyway, all this is going to be on the Figure Markets platform. So, there are too many guys that have a track record of being successful. He founded SoFi and brought that to its ultimate, public listing. And I think he's one of the few guys that can actually execute on a vision. It's not easy, and there have been fits and starts, but I would call it rewiring the plumbing of the
that's right
financial system.
So who do you think is going to go public first? Because obviously that's going to be another phase as we restructure. I mean, nobody's IPOing the markets. That we've got no new fresh stuff in actual markets. Is it going to be Circle, you think?
Well, Circle, Kraken talked about it yesterday. We own both those companies in our portfolio. I've been saying, to prospective investors, look, I don't know very many things with a 99% degree of probability, but I will tell you the 99% degree of probability, 5 years from now, Coinbase will not be the only large public crypto Web3 blockchain business. It's impossible. And so, we're investing in the companies that in 2, 3, 4 years, I think potentially could be public. Kraken, eToro is another one we have. Ledger, possibly. Deribit, potentially. These are companies making hundreds of millions in revenue. And I think that's what the old world doesn't quite really realize or understand. They just think it's all venture. So it is surprising to me. We're still the only growth fund in the world that's exclusively and only focused on this area. I'm just an old-time macro guy. I think they're coming. There's just no way, I keep saying to you this, that it continues to be the case. Part and parcel of this, the normie world, that people call it, the institutions are coming. I just think broad-based adoption begins with the ETF, with the traditional players putting their stamp on it. But even a broader-based adoption comes with my companies beginning to go public. And it may be on NASDAQ, it may not be. Maybe they end up being public in Singapore and London. I don't know. But I don't think, you can't go from the traditional world and traditional mindset of having equity at 60, 70% of your portfolio into DeFi, right? There has to be an intermediate step. And I think everyone is comfortable owning equity in businesses. And so that's one of the reasons my whole concept with 10T and 1RT was to invest in and be the bridge from the traditional world to the new world. I never was planning to compete in the new world. I can't compete with Polychain and Paradigm and Parify and, Andreessen. And I just don't have that level of technology expertise. I mean, Mark Andreessen, for goodness sake, forget about it. So, but the bridge between the old world and the new, I think, is 10 years. It takes 10 years to cross that bridge. And I think it's going to be done partially through the equity ownership. Capital will move in through the equity ownership of companies that are successful.
One of the things that's very interesting is the Kraken team pinged me about that they had bought an equity exchange or traditional market exchange, or they were buying one, or a brokerage, whatever it was. That is so obvious where this is going as well, is sooner or later, one of these Coinbase, Kraken, and everybody else will end up just tokenizing equities or just...
Oh, yeah. No, I think that's 100%. That's already, I want to say, baked in the cake. But, when I think about this next bull phase, past the halvening into 25, 26, I think we come out of that, certainly Bitcoin over 100,000, Ethereum over 4,000. I think it's not a very aggressive call. But as the normie population moves towards like more full scale adoption, you're going to see everything. Absolutely. This cycle is about those people moving in, and you're going to see everything tokenized. I mean,
yeah, everything everywhere all at once is the whole idea. So here's a thing for you. I did a bit of work on brokerages and their customer base. So you hear these big numbers about Fidelity and Schwab, but most of that is the RAA stuff.
Yeah.
So you take the online stuff, i.e. for the active population. Schwab, Fidelity, TD Ameritrade, they're all about 2 to 4 million monthly active users. Interactive brokers, 5 million users, 300,000 monthly active users. Then the next step is Robinhood, which is 22 million accounts with 12 million active. And then the thing that dwarfs all of them added together is Coinbase. It's 109 million accounts, of which at the depth of the bear market, 9 million were active. I was at Coinbase the other day in their offices, chatting to the head of asset management. I'm like, if activity goes just to normal, not crazy levels, back to normal, he's like, yeah, we'll be at 40 million active wallets. I mean, it's all, people can't see it, but it's already dwarfed the traditional markets in terms of retail participation.
I know. Yeah, let me off it. Was there a follow-on?
No, it's just the observation.
It's just how big it is. I know. It's the same thing when I say to people that, there's $2.5 trillion of value already here. They just can't believe, like, what's it doing there? I still get questions routinely. Now, they're proclamations for people. There are no use cases. This is all still speculation. Look, those people will be left behind. Yeah, I agree. It's already with us. It's already big. And look, Larry Fink is probably the most important comments of the year. Like, even forget about the ETF. Yes, that's great. But 2 years ago, he was saying this is all about fraud and money laundering. And then he changes in July and says, well, it's a global asset. It's an important asset, and they're going to get the ETF. So if you think about it, that's about as traditional a guy as there is out there. He completely reversed. So I think it's just a matter of time. But, there's so much capital in the U.S., right? And the people at the very back of this train are U.S. institutional and also the big U.S. financial businesses. They already make so much money. Like, look at Blackstone, right? It's $1 trillion. They don't care about, that's just their AUM. They don't, they're not really caring about crypto. They're not focused on it. They should own the whole space already, right? Like the companies that I own, they should own all of them already. And, but when you have
the gift of the opportunity,
business, what's the point? Like if you already have success in your area, but like, I don't know, if I'm Steve Schwartz, maybe I wake up one day and I say, look, I'm going to put, I'm going to put $10 billion here, and I'm going to have 50 people in this area move over to that area, but they're still not there. But But now this phase, I think at the end of this phase, everyone will be there. At the 25, 26, maybe not everyone, but I think it's going to be that my companies, many of them potentially in 25 and beyond will start to become public. And then you get the brokerage reports, you get the education gets ramped up. And that's really what we're talking about. You and I talking about this back and forth. I mean, it just seems like, we're not on CNBC, or maybe you are. I'm not. I'm not on the news or anything like that. So I still think you have like the FT and the Journal and all of these guys, New York Times, they're way behind. Bloomberg is nowhere in terms of their understanding. So I think that's all coming in this cycle.
So final question for you. Do you think that the structure of the cycle changes, or does it remain the same? So let's say...
Which cycle?
The crypto cycle. Is it going to be as volatile, or is it going to be somewhat more smoothed by the sheer number of people being involved?
Well, so I think the venture... I mean,
everything's cyclical, right? We live in a cyclical world. We know that.
Yeah. The venture side will continue to have all this volatility. But if you look even at our businesses, the volatility of earnings, revenues is not comparable to the space. So, I think a business that's producing revenue. And so it's just like a bond that like a zero coupon bond that has no cash flow is more volatile than, a high coupon bond that's paying you, whatever it is, or a lower credit treasury, instrument, right? So I think that the tail end, so Bitcoin will be less volatile in these next cycles, but look, it's impossible to think that there are only going to be 2 or 3 protocols that achieve network effect, right? Arguably, and I don't want to get into this now, but arguably like Ripple, which I don't really understand, is a $40 billion asset, and then the company is worth somewhere between 5 and 10 billion. So, and they've been around for 10 years. So ordinarily, you would say Ripple's achieved network effect. You don't hear many people really talking about how great Ripple is, but they've been around. Ripple, if it was going to go to zero, it should have gone to zero. Why hasn't it gone to zero? I don't know. We haven't done the work on the business. We probably should have. My point is that the stuff that's at the early stages of invention, the pre-public protocols that are all programmers are working on, that's going to stay as volatile. It'll go up 100x and then go down 99%. That is always going to that's going to continue. But as these cryptocurrencies achieve network effect, the volatility goes down, period. And I think that the businesses are sort of on the lower volatility at the end.
Because they have cash flow.
Yeah, because they have cash flow. I mean, the protocols have cash flow. Ethereum, I think you probably saw, was the fastest to 10 billion in revenue, or the second fastest business, if you would call it that, of all time, right? So but it's not the kind of revenue that traditional investors are used to. So I think that like our space is going to just explode, and as more capital comes in from the traditional world, this is the adoption cycle.
And the other thing, the final thought from me is that one thing people don't realize, you obviously realize, most people don't realize, this is the only global homogenous asset class.
Yeah.
It's the same in Brazil as it is in India, as it is in Silicon Valley, as it is in London.
Yep.
That shows you the TAM is larger than anything else.
It's more than hundreds of trillions. And I tell anybody who's sort of under 30 that, if you're an entrepreneur, you're interested in building wealth, this is the space. Figure out something to do. There are a number of things that you can do, meaning that even if you're let's say you want to be a salesperson, okay? I have a bunch of companies that need great salespeople. You have to understand the product, etc. if you're interested in marketing, if you're interested in programming development. And this is, whatever your skill set is, it's needed. I'm just telling in this space. We have board seats on 11 of the 24 companies we're invested in. And so like we really now, this is sort of the next level of business for us. Our next level of focus is that we are actually getting involved in helping our companies operate. And you might like laugh a little bit, like Dan going from macro PM to rolling up his sleeves, like talking to management about doing X, Y, and Z. You might be saying, well, what do I know about management? But if you focus enough and you have the right team around you, I've really built a phenomenal team. We have 5 partners. I've got 6 analysts now, and we're 17 people. And we really have that skill set. And, to be able to go in and actually with companies that aren't doing so well, we can actually protect our downside a little bit by, injecting some, I guess, strategic and governance help. One thing I would say, and this is different, again, maybe we should have talked about this earlier, but what's really interesting about some of the companies we own is that because they're private deals, we actually are able to structure them much differently. Like the companies that we own, it's not the same thing. It's not similar to owning Coinbase. Coinbase, you can own common equity, right? You're common. And so, you can push it on the screen and you can see it trade live. But the reality is in half the businesses we own, we have liquidation preferences. So we actually own calls with embedded puts, which is very different. Our downside in many of even these growth businesses is protected. And so that's a whole new area that I've moved into, that we moved into, that I never would have been involved with, as a macro guy years ago. So that's a skill set that, the team has. And yes, there's illiquidity, but there's also quite a lot of protection. So that's why I would respond to Stevie that I'm not getting my head handed to me, because we have liquidation preferences everywhere, and all sorts of other rights that we've embedded into the portfolio.
Fabulous, Dan. Look, let's see as we kick off. As you said, this is just the second innings. It starts to get exciting, then it usually pauses for a bit, and then it all starts to go really bananas. So it's all to play for. And I think we both agree it's an everything, everywhere, all at once. So
and the key is not to focus on anything else. Really. That's right. You take your eye off the ball here. I think it was over a certain period of time, if you miss the 10 biggest days in Bitcoin, your return is like de minimis or whatever it is. You have to be committed, long. And the only way to have conviction to do that is to do all the work and stay focused.
I agree. And, I put it in GMI, I think it was July, and it was just titled, "Don't Fuck This Up." It's just don't fuck it up. It's easy.
Yes.
You just don't get in your own way and do stupid things. Just focus, as you say. Don't take excess risk and ride it. You'll be okay.
Exactly.
All right, my friend. Great to catch up as ever.
Yeah.
And I'm sure we'll check in like 6 months' time to figure out where we are in this whole thing again.
Absolutely.
So, as ever, another great conversation with Dan. This whole crypto thesis of mine and his is all part of my exponential age idea. And I think those of you who are subscribers to Real Vision Pro Macro or GMI understand the journey that we're going down. And also the new product, the Exponentialist, covers this as part of the broader technological adoption. But when it comes down to finance meets technology in an explosive opportunity, this is the big one. This is the big daddy. So take as much time as you can to learn about these things. At Real Vision, we have the Real Vision Crypto Academy, and you really should, I'll put the link below, you really should spend the $350, whatever it is, to educate yourself, to not fuck this up. The opportunity is too big. We all make mistakes. So learn from great people. And that course is run by two ex-finance people who are also at the heart of crypto investing and NFTs, Ovi and Mando. That $350 is well worth it in what it's going to do for you in your journey. And if you're further in your journey, then you can get some of my writings in Real Vision Pro Macro, which I think will really help you. This journey is about knowledge. It's the accumulation of knowledge and applying that knowledge. That's what Dan does. That's what I do. And I urge you to do the same. Anyway, see you next time.
Hey there, revolutionaries. To join a community sharing insights like you just watched, head over to realvision.com. There you will get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Be a part of our community of lifelong learners. See you there.